We're back, stocks wobbling after hitting all-time highs earlier in the session. NVIDIA's incredible run taking a bit of a breather. Here to weigh in on all of it is Jeremy Siegel, professor of finance at the Wharton School and chief economist at Wisdom Tree. We got a lot to talk about, Professor, and it's great to have you on this Friday. So you're going to walk away to the weekend thinking what now about this rally?
Well, Scott, when you have trending stocks, when you have momentum stocks, there's a very old saying in Wall Street, and it is up the staircase, down the elevator. And if you take a look at NVIDIA and other trending stocks, that's what happens. Momentum players move on. They have very tight stops on it. As long as it's going up, they're there. And as soon as it breaks their trend line, boy, they're out. We have what's called a one-day reversal, new high, then low. My experience is that's rarely the final high for the stock. Usually you have a couple days, mixing on the price, and then it will resume its upward course. So this is something I've seen many times before, and does not scare me.
Okay, so the elevator goes down another floor or two, but then you get back on the escalator and you start going up?
Yeah, to consolidate. Yeah, that's exactly right. It's kind of like a head fake. I mean, playing the momentum play requires a steal because, when it goes down, it's so sharp, you say, oh, I'm going to get out. And then what happens, it goes back up to new highs, and you're so angry at yourself for getting out, you get on again. And it goes up another group, and then what happens at the very end, and I don't think we're at that very end, is you're saying, hey, diamond hands, I'm not selling this. It doesn't matter what. Unfortunately, that's usually the very top.
Well, Professor, now you're using some of the lingo from the meme stock mania.
Yeah, I'm not saying they're meme stocks at all because these are real companies. But take a look at what happened to Cisco in 1999 and 2000. I mean, this was a great company, got overvalued. But we talked about this last time. Could NVIDIA get there? Yeah, but it would be at a much higher price to get to what Cisco's evaluation was in 2000 compared to what NVIDIA is now.
Does it tell you, though, when you watch a stock like this go up seemingly every day, and it just reaches these heights that make you sit back and say, I just can't believe what this stock is doing? Does it tell you that there's just too much froth in certain parts of the market, but not the whole thing?
It tells me that we're beginning to get the trend followers and the momentum players. And they don't care what the valuation is. They don't care what the stock does. They don't care what the company does. They got their charts. They say, wow, with this trend over there, make the trend your friend. And I'm making it my friend, and I got my stop there. I'm riding it up. Everyone's convinced that they can jump off the train before it goes off the cliff. And I'm not saying that NVIDIA is at all ready to do that, but these are the games that speculators play, and I'm beginning to see more of those sort of players move into the market, but it's extremely early stage, not late stage, because 25 years ago, it had been going on for many years before finally it cracked.
But you're painting a scenario, though, in which exuberance starts to get a little bit irrational and then turns into pure euphoria, and that's when you have to worry. But you don't think we're anywhere near that stage yet? Yeah,
exactly.
What did you make of Powell on the Hill this week, who came off to many, maybe a little more dovish than expected?
Yeah, a little bit dovish. I mean, he said, and we're close. I didn't expect that. I mean, he could have shaded it to, we saw that January report, a little worried. It means we got a lot more work to go. But I think, maybe got some inkling of, a rather softish, good wage number that we're having now, and seeing some slowdown, saying, we are very, very close. I think next Tuesday's number, CPI, and which of course is going to be the last one before the March 20th FOMC, is going to be quite important. I really like to see a reversal of that from the uptick that we had in January, and I think that is definitely possible.
How many rate cuts are we getting this year, Professor?
Well, we talked about that. If we get too many, I'd worry, because that means the economy is crashing. So, you just say, "Oh, I just want as many as possible." No, you don't want as many as possible. And in fact, as Mike said earlier, it's much more important for the economy to stay strong than for us to have a rate cut in May or maybe June or earlier or later. However, I mean, I think, my feeling is that we're going to have rate cuts. However, let me warn you, and how many days is it going to be? March 20th, 12 days. I think we're going to have less rate cuts on the dot plot than we did in December. Because I think, honestly, Fed officials are surprised and pleased the strength of the economy, and they say, we don't have to cut that soon, and I can afford to wait a little longer before I can squelch inflation. So that might rattle the market a little bit, but it's only because of the strength of the economy, not because they're stubborn and won't do it beforehand. In fact, Jay Powell says, I'm not waiting until all the inflation is wrung out before I'm going to start cutting, which would obviously be too late at that point.
How far do you think the S&P can stretch? We call it, what are we? We're 5130. We can call it now. What seems reasonable to you?
Well, we're 21 times forward earnings. Earnings are holding in very well and might actually come in a little bit higher. That's a full valuation, so I may say 5-10% over. Hey, can we get 50% over, 60, 70? Absolutely. Just like we can get 50% under at the bottom of the bear market. That is the emotion that has always swung markets over the decades, over the centuries. It's the type of volatility that a long-term holder in stocks has to get used to, to reap the benefits of the long-term returns.
Let me ask you one more question before I let you run. Have you been watching how Apple has been trading in the last, several weeks? Do you have any concern about it? What do you make of it for a stock that we used to say, as Apple goes, perhaps so goes the market, not so much today?
Well, and one we could ask, the first one maybe to topple. I'm not saying Apple is going to topple from the Mag 7. But Tesla, the competition. Again, look at what Tesla's gotten in China, which Musk has said, this could be a problem besides all the other problems that EV has, and that's quite what Tesla's, down 50% from its high. Now Apple is still, this type of reaction from Apple, if you take through history, is certainly nothing unusual, and it still has a great base. But there is some competition. Take a look at the Magnificent Nine that reached their peak in 2000. How many of those are left? A few, but nothing stays at the top forever.
We'll make that the last word. Enjoy the weekend. We'll see you soon. Professor Jeremy Siegel, the Wharton School.
All right, guys, this is going to be the part of the video where I break down the stocks that were mentioned in the CNBC clip. Today we're going to be breaking down NVIDIA, Cisco, Apple, Tesla, SPY, and QQQ. So we'll start with NVIDIA. They take the stairs up and the elevator down. As you can see, there's about a 10% move today. If you saw my last video, we measured it out. If you didn't, go ahead and check that out. But we'll measure it one more time from 974 all the way to the lows down here. Was 11% straight down in one day. Not to mention it gapped up 5% to then sell off that much. So this is a major dump of volume, a major slowdown in the stock. But look how bullish it's been. Just in the last 30 days, I don't even want to know how many percent, because none of it's mine. From the top, 25% you could have made in the last 1 month. How crazy is that? Last 20 days, if you bought the low, if you bought the low and sold the highs, almost 50%. 180 days, this is back at the consolidation. So guys, this is mainly what I wanted to talk about. This looks like the start to maybe a couple months of sideways consolidation. But obviously, this is not a bad sign. This is how the market catches up with moving averages. This is how it stops from selling off. This is a result of a long crash and a V-shaped recovery. It just held and waited for moving averages to catch up and time to continue and earnings to get better rather than selling off. That's a huge sign of momentum, And so this stock is very, very strong. You can see it was pulling so far away from its 21 moving average that it had to drop 11%, and it still probably has a couple more percent just to touch it. Now, if we want to look at just a quick inside cap, we can see where it might base. We've got kind of a support level around here where it has started to base, but with this last red candle, it's not looking too good. It ended right at negative 5.55%, which is kind of funny. If it does break about 870, I would say, we're probably going down to the next level, which is around 800. That's a pretty good sell-off for NVIDIA, and a lot of people are going to be looking to take advantage of it, so it might not actually make it down there. Just because this stock is so, what some people would say is undervalued, even with a chart like this, it's hard to believe. Now, Cisco, this is the chart that they were talking about that some compare it to. Look at what happened in 2000, the dot-com bubble. This stock just ran and ran and ran and ran. Does that look familiar? That's kind of like the NVIDIA chart right now today. Some could argue there's the first bar, and then we could, if it starts to look like this, we might not look too good, you know what I mean? But check this out, guys. This was, what, 25 years ago. We're still not to the highs that some people have this stock at. How crazy is that? That's what blow off tops can be. That's what real epic bubbles can turn into. And that's what some people keep saying this is. I'm not in the camp of that. Apple, if you want to look at them, we're already on the weekly chart before we go back. We're almost headed towards the 200 weekly moving average, which very rarely happens in history. So it's going to be a great buying opportunity. We're already only a couple percent above it. So this is looking great. I'm glad that I'm adding right here. You can see there's basically kind of a double bottom right here. Professor Siegel thinks this is overdone just as much as I do. This is a great company with a huge install base, a lot of money to be made, and they're just going to figure out the best way to do it before they fully implement it. Let's take out percentages. If we look just back to the high from here, 17% return, guys. And then if it comes back to the high, it's most likely going to go out of it. I've measured the move should go around 240. That's a 42% gain. And we've seen how quick it can happen. Look, from less than 5 months, you can make a leg that's the same size as what we would need to get to 240 in Apple, guys. A good strong support around here. Support turned resistance. It should be rejecting more or less, and it should be heading up to the upside. Tesla is another stock that has just been getting obliterated. Looks like we broke the low today. Let's double check. Oh yeah, we definitely broke the low. We're definitely going lower. I've been saying for the last couple days, if you've been seeing my videos, once we break 180, guys, hang on to your hats. We've broke it. We seem to maybe held that low just barely. There is I'll give it a 5% chance that we just skyrocket from here. I give it a 99% chance that we're going to go lower. And going lower from here does not look good. Like I've said before, we can hit 150, looks like the next major support. We've got some resistance around here, turned support. Here's where it's supported, and last time it could come back, maybe support it again. And if that fails, guys, we're going to 100. Bottom line, this stock is not looking good. It's not been looking good for years and years. Until it breaks this red line, I wouldn't be touching it. That's just me. The overall markets, this is the S&P 500, guys. We've broken out of new highs. We've continuously had new highs for the last weeks and weeks. Almost 4 months straight have been green. We're finally having a red day. Market's down, finished negative 0.6%. It's not too much of anything unless we start breaking this 21-day moving average. We start heading back down. I think we're kind of due for something like this, honestly. I think, and if we do, tell me, I would almost guarantee you this exact move would put us back at this white line. Bet. That's pretty close. All right, so let's just say if this exact move would play out from here, we'd come back down just under this line. If it was exactly like that. You know, it's not exactly, but they move in 2-3 step stages. This would come back. This is going to be a major retest, I would assume, for the QQQ as well. We can take a look. A major resistance turn support. It's kind of messed around with it a little bit. The 200-day moving average is starting to catch up, and that would be another perfect bounce off. If this price action starts to come back towards 400, it would be another great sign for a leg up. It would be some consolidation. Yes, it'd be some short-term pain, but it'd be for the long-term game. I hope you guys enjoyed the video and learned something. If you did, please smash that like button and subscribe. And if you know somebody that likes this type of content, make sure and share it so I can grow the channel. Thanks for watching. I'll catch you in the next one.